Alright, so C3.ai stock took a strong hit and lost approximately 33% in the past month. In this time frame, the management of the company reported their earnings result for the third quarter of 2025. And yeah, they're one of these companies that are living in the future, that are living by their own calendar, and instead of being right now in Q1 2025, they are in Q4 2025, so don't get confused. 1 month ago, I made a comparison of C3.ai and SoundHound.ai and came to conclusion that both were overvalued, but C3 was much better investment back then. Since then, both of these stocks crashed significantly as well as the whole market, but by everything that I said in the previous video, we could expect that C3 will crash much less than SoundHound, but now we see that they crashed almost by the same amount. So my question is, did SoundHound not crash enough, or maybe investors overreacted regarding C3 and this is a good time to buy the dip? Hey there and welcome to the Market Monkeys channel, it's Julia here, and today I will break down everything related to C3.ai, everything you need to know if you are an investor of this company and everything you need to pay close attention to if you want to buy the stocks of this company. So C3.ai specializes in AI enterprise software. It basically means that they're creating these pre-built AI applications in order to help enterprises and businesses solve different tasks, like for example fraud detection or supply chain optimization or energy optimization or even defense applications. They already operate in a wide range of industries, but what is surprising is the fact that they're continuing to add new sectors all the time. And they actually have this nice slide from their past earnings presentation, and we can see from this that they operate in government, manufacturing, professional services, energy, oil and gas, and adding new industries like healthcare, automotive, financials, and many others. Now, if it sounds somewhat like Palantir, you are not wrong. Both of these companies focus on managing and analyzing massive amounts of data, but the difference is, as I already said, C3.ai creates these pre-built AI solutions for specific problems like the same fraud detection, for example, while Palantir offers this highly customizable platform that actually integrates into the business and allows the business to make sense of its own data. So they basically target slightly different needs for pretty much the same customers. But the main question that I have regarding this, and I cannot find an answer myself because I do not have that much of an extensive knowledge that is required to understand this whole matter, is if a business already decided to work with Palantir, for example, if there will be a chance in the future, or if they will find themselves in the situation that they will also need to use C3.ai solution. Because if the answer is no, and if every enterprise must choose between countless of the companies, it's not only C3.ai and Palantir, there are many competitors on this market, and if it's only one that they need to choose, I am very concerned regarding the market share, especially for C3.ai. If you find this information valuable, don't forget to support our channel by pressing a like button and subscribing. One of the biggest things that is currently positive, but it could turn actually into the huge risk for investors, is their major partnerships with the enterprises like Microsoft, Amazon, and Google. In third quarter 2025, approximately 62% of their agreements were driven by these partnerships. Their partnership with Microsoft is the most aggressive, with over 600 active teaming agreements worldwide. Although it will be fair to mention that they're also expanding the same as Palantir into government sector, and they're also actively closing deals with the organizations like, for example, US Air Force and other defense agencies. Basically, partnering with huge enterprises like this adds credibility for C3.ai, and other businesses will have more trust and other businesses will more likely use C3.ai solutions. But the major risk here is that if any of these companies, for example Microsoft, if it will decide to create some in-house solution and will drop C3.ai completely, we can only imagine what will happen to the stock of this company. It will crash, and I'm not sure it will ever come back. So please take into account that while it's still a positive catalyst, they have this concentration risk, and you need to pay attention and you need to always follow what do they do with these deals, do they continue them, or what is happening in general in this area. Now let's talk about the earnings, and this is actually one of the most important reasons for the stock drop. So C3.ai reported a 26% revenue growth year over year, reaching almost $100 million in third quarter. Subscription revenue grew 22%, which is solid. Don't get me wrong, 26% year over year growth in revenue is perfectly fine result, and it's definitely not the reason for the stock price to drop by 30%. However, there is a couple of red flags here. So first of all, the management of the company has been pushing this very strong positive narrative, a 7-in-a-row quarter streak of accelerating revenue growth. So from January 2023 until October 2024, the revenues were growing faster and faster with each quarter, starting from -4.5%, getting to almost 29% growth. So as you already realized, the streak has been broken. The revenue grew 3% less than the previous quarter. Currently we're at 26%, and the previous quarter we were at 29%. This is upsetting, of course, and many investors and analysts saw this as a red flag. In my opinion, it's not such a big deal, and in my opinion, it is a red flag only because people, investors, tend to overbelieve the management of the company. And the management of the company built this whole story of them growing their revenues just to pump the stock up, right? The management will always try and do everything they legally can to pump the stock. It's in their interest. Basically, my point is that accelerating revenue growth is great, but setbacks can happen. What if after this setback they will grow not by 3 or 7 or 10%, they will grow by 50%? Anything can happen, and this is not the only indicator that we should look out for. The bigger issue is, in my opinion, is their loss from operations, which grew from $75 million to $87 million. And that's a lot. Cash from operations was negative $22 million, meaning they're still burning cash, and net income starts entering more negative territory, which is concerning. Basically, if the company would be moving into the direction of profitability, the whole narrative would be different, but we're not there yet. I remind you that C3.ai is not a startup. The company was founded in 2009. Since then, they grew significantly and went public. So come on, you've had more than 15 years and we are not even talking about profitability. For me, it's kind of weird. And in general, the main point of any business is to scale and to earn. And if your business can only scale but won't be able to earn, what is the point of this business? But regardless of everything that I said before, at Citizens JMP Technology Conference that took place after the earnings on March 3rd, CEO Thomas Siebel sounded extremely bullish. He pointed everyone's attention at their 131 enterprise AI applications, positioning them as the leader of enterprise AI. He also doubled down on their partnerships, especially with Microsoft, of course, calling it a game changer. Don't get me wrong, everything he said is legit and everything he said is very positive things for C3.ai, but let's not forget that positive stock price movement is in the best interest of the management of the company. And by the way, one concern that came up is the quality of the revenue streams, and some analysts, like those at Morgan Stanley, for example, are questioning whether their demonstration license revenue, which is a big chunk of their business, is sustainable, and they basically say if those will not convert into long-term recurring deals, it's a big risk, so we can pay attention to this as well in the future. By the way, at this conference, Siebel also addressed his health issues, after which he actually has vision complications. So basically he said that he will stay actively involved, but some big part of responsibility will move to the management of the company, and we don't know how it will turn out. It could be good, it could be bad, but it's another factor that adds uncertainty to the investors. Analysts set price targets from $15 per share at the low end to $56 per share at the high end, with an average at around $31 per share, and right now the stock sits at around $22. C3.ai trades at price-to-sales ratio of about 8, which isn't outrageous for an AI company, but it's also not cheap. And for me, given the current market situation, stock volatility, lack of profitability, I cannot say that this stock is a screaming buy. But if you are a believer in C3.ai's long-term vision, or if you wanted to buy the stock of this company before, or if you already started to enter this position, my suggestion is do it slowly. You can buy some small chunks of this position and wait for some clarity to come, at least in the overall geopolitical situation. With the overall situation in the world, with this uncertain market, I wouldn't be surprised if the stock will drop lower than it is right now. Basically, for me, I was considering investing in C3.ai, and I actually invested in SoundHound AI back in time. It was approximately 3 months ago, when the market sentiment was different than it is right now. And for now, I definitely want to buy the dip, but I'm kind of afraid to buy in the dip with the companies that are small, unprofitable, and very volatile. So I decided for myself to slowly start investing in the companies, for example, like Uber, like Amazon, and some big enterprises, maybe even Nvidia. I would invest in Nvidia if I already didn't have pretty large position in. Basically in the companies that I'm not afraid that they will lose 70% in a single day just because of the market overreaction. But again, if you think that this company is the future of AI, I can understand why you would think so. I can understand why you would want to buy the stock of this company. So if you think that this company is the future of AI, write in the comments for how much did you buy or for how much you want to buy right now. Thank you for being with me. Don't forget to support this channel by pressing the like button and subscribing. I will see you next time. Happy investing!